Look at your cash accounts first. If cash is low, but accounts receivable are high, it means you need to collect money. Hey there, family. Gabrielle here, daughter of the Almighty, mom to two amazing kids, and a Yorkie named Luna. Also, I'm a fellow Christian business owner. If you're ready to say yes to financial clarity and exchange chaos for calm, you're in the right place. We're diving deep into strong faith, practical stewardship, and savvy bookkeeping. All right, family, grab your coffee and your notebook. Let's talk about God, business, and getting those books in order. Welcome back, family, to another episode of God and Grace Bookkeeping. So today we're gonna talk about the balance sheet. It's the end of the year, so balance sheet is probably about the time where people are starting to start looking at them, and I want to talk about it. Okay, so if you ever looked at your balance sheet and felt completely lost, don't worry about it. Okay, don't panic. It can look like a lot of gibberish, a lot of, Gabrielle told me I don't need an accounting background. What is this? Don't worry, we're going to break it down simple. We're going to break it down in the simplest way that I can, use some little analogies, a little relatable story, and we're going to see if we can tackle this together so that when you're looking at your balance sheet this year, you can favorite this episode, like this episode, download this episode. You can listen to me talk to you at the same time while you look at your report. Ding! Okay. All right, so let's think of your balance sheet as a single snapshot. Literally. Put it in your head. Single snapshot. It tells you everything your business owns at a precise moment. Okay? So let's say it's like 11 a.m. and on December 31st. Let's talk about like last year. Because this year is coming up to an end, right? So this is pretty cool because with accounting software, you can compare last year's things that you owe at any precise moment, to now. You can even future date it and it'll just do a holistic picture for you in your accounting software. I love accounting software. If you're not using accounting software, what are you doing? Okay. All right. I'm getting off of that. So why is this important, having a snapshot? So I was talking to sister, my god sister. She is a tax preparer, and we were talking about in these economic times, and we were talking about a lot of business owners that have the business savviness, but like to get the business going, can make something out of nothing, and then they're lucrative. And then now this round of time, they're either scrambling around for taxes, they're asking for extensions, they're bringing boxes of receipts, or they're printing off their bank statements and they're like, here. And she's like, you make a certain amount of money, you need to be doing your bookkeeping because you need to track your finances and everything for the IRS. All right. So, but the thing about just bringing in your bank statements that show your bank balance, it doesn't give you a holistic picture of your business or at all. Honestly, it just tells you what money is actually in your account, but you don't know if that's going left or if that's going right. Is that going up or is that going down? Okay. Um, Say if you took out a loan and you're like, let's be honest, hold it to my mind, not my heart. Something I like to say, right? We're human. We're not gonna remember everything. We're ripping and running as business owners. We're ripping and running. And say you look at your balance sheet on I'm sorry, not your balance sheet, your bank statement, and you're like, oh, I have $50,000 in there. We gonna talk about prosperity here, okay? $50,000 in my bank account. Okay, pump your brakes. That's not accounting for, the $25,000 loan that you have to pay and you need to start paying on monthly, right? That doesn't do that. But guess what? Sheet has that information. The balance sheet. Yes, guys, business loans, things on credit, all of that, equipment, the lifespan of your assets, all of that is on the balance sheet. The stuff that you need to run your business and the way that you're financing your business is on that balance sheet. Okay? Like, how can you run your business without it? The balance sheet gives you that holistic picture of your business health by answering one simple question. Where did the money come from to buy everything that my business owns? That is a powerful question that you need to know. Okay. So there is an equation that the balance sheet uses. So I want to break it down. Don't worry, it's gonna sound like a mouthful, but I'm not, don't panic. So we're breaking down the equation that says assets equals liabilities plus equity. Okay. So the whole balance report, the balance sheet revolves around the fundamental. I cannot speak. Maybe I should have poured a second cup of coffee before I started recording, but no, I wanted to get into this. So bear with me. Okay. Hold it to my mind, not my heart. So the equation is assets equals liabilities plus equity, shortly abbreviated A equals L plus E. This equation, guys, it must always, 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 no exceptions. None, zero, zeta, nada, zilch exceptions, okay? Seriously, hear me. If you don't take anything else from this, take from this, okay? It must always balance. If your balance sheet does not balance like with this equation, your bookkeeping habits have a problem. Something is not mathing. Something is not adding up correctly. Something was recorded wrong. Something is not it was labeled incorrectly. You need to do some digging if this equation does not balance. Okay. So for an example, let's talk about like say for example, a car purchase, right? Businesses, you purchase things in your business name. If your business needs a car, say that you purchase a car. Okay. So the assets, what you own. Okay, a new business card you got for like $30,000. Phew, remember those days? A new business card worth $30,000. Okay, what you own, that's your asset. So that goes on the A side, that goes on the left side of the equation. Okay, liabilities, what you owe. Say you put down $10,000, that's out of your money, right? But your car loan was $20,000. L equals that loan. $20,000. That's a liability. That's what you owe. That's what you owe as the loan, the car loan. And your equity would be that $10,000 that you paid for a down payment. Right? So it'll be 30,000 equals 20,000 plus 10,000. Guess what, guys? 30,000 equals 30,000. That is a balance, right? $30,000 for the asset, which is how much your car was worth. $20,000 for the car loan for liabilities, and $10,000 for the equity that you put as a down payment. That balances out the equation. Okay. So the good news is assets, everyone's favorite one out of the whole equation outside of equity, are what your business owns that has value. This includes your bank accounts, money clients owe you, your account receivables, and equipment. Okay, so here's a tip for reading it on the balance sheet. You look at your cash accounts first. If cash is low, but accounts receivable are high, it means you need to collect money. That's like the cash and equivalent portion on the balance sheet. So you look at it and you're like, my money is a little slow, but I have a whole lot of money out here. It's time to start sending out some phone calls, some reminder emails, something because invoices need to be paid. You have money that is owed to you. Okay. Section 2, the liabilities, your debts, your loans. This is the cost of doing business. Liabilities are what you owe to others. Loans, the credit card debt, and taxes you have not paid yet. This goes right here. A way to track that, and a tip for reading this section is check your accounts payables. Okay. If this number is growing faster than your assets, you might have a cash flow problem coming pretty soon. So your account receivables is money, like your invoices that your clients owe you for doing your services. Account payable is what your business owes to this debtors. Okay, so if this is higher and your income is lower, you're upside down, right? Like your business is in trouble and in trouble fast, and you need to collect. And the final section is your equity, your net worth. This is the most crucial part. Equity is the true financial worth of your business. It's the money, okay, that you invested in your business plus the accumulated profit or loss over time. Okay. So your owner's equity is the number you want to watch grow. This is the ultimate sign of financial clarity and stewardship. If your equity is negative, it means you're losing. You're losing. You're losing. You're at a loss. You're at a loss. And if it's that's when you need to start thinking about, okay, let me look at these other financial statements. Let me start digging a little deeper. Let me see if I need to run a sale, or let me see what I need to do. Like, I'm borrowing way too much money. Like, you dug yourself into a situation that's not okay, and we need to figure out you need to figure out how to get in there and turn things around. Okay. So say when you open up a business and you're like, I'm gonna put $5,000 in there. Boom. That's your owner's equity. You put $5,000 into your business, you invested into your business, right? So say you made, $5,000, and then your business made $10,000, and $10,000 left over after like your liabilities and stuff like that. Guess what? You just increased in like $10,000 in equity, your business worth, because this is after the bills and the liabilities and things of that nature. So definitely keep that in mind. Okay. So your balance sheet is not scary. It's just a snapshot that shows you your assets equals your liabilities plus your equity. So learn to read those three sections and you will understand your business health instantly. If you don't look at, well, yes, you need to look at it all. I was about to say, if you don't look at nothing else, I'm not going to say that. I'm not going to plant that seed. We're practicing great bookkeeping habits here. We looking at we looking at all three reports every month. Okay, we look every month, and then if you want to get a snapshot, you pull this balance, you run your balance sheet report. It's amazing. Okay, so your clean bookkeeping habits are the key to keeping that sheet balanced and accurate. All right, really think about that, family. The balance sheet. If you get a report and you have your bookkeeper and you get your financial reports and you have your balance sheet, take a moment to look at that. If you still need help understanding that, you can come back to this episode and you can hear it step by step on what you should be looking at and what things may mean. In accounting, when numbers are in parentheses, that means negative. That's a little tip. If some reports will have numbers in parentheses, that means that it's negative outside of putting like the negative number or highlighted in red. That's more so of the accounting, how reports are printed and presented to clients and customers. So definitely take that into consideration, okay? All right, that's about it for today, family. So if you're ready for, wanting a weekly newsletter with amazing bookkeeping habits or check-in links to our that week's podcast episode, we do have the email list live. Please go, it's a bit.ly link. I shorten it for you guys because it can be a mouthful. It's bit.ly, bit.ly/G Grace Podcast. Secondly, you can also download my free ebook, Chaos to Cha-Ching. It definitely covers what this balance sheet is. It definitely gives you ideas and tips on how to do your own bookkeeping on your own if you want to do your own bookkeeping. Okay, so please head over to the show notes. You will find those links there. And until next time. As we close out today's episode of Guiding Grace Bookkeeping, I truly pray that something resonated with your heart and brought you closer to financial clarity and peace. If you felt that connection, or if a specific insight sparked something within you, please consider taking a moment to leave us a review and subscribe to wherever you listen to podcasts. Your feedback helps us grow and reach more individuals like you. And if you know someone yearning for more grace and wisdom in their finances, be a blessing and share this episode with them. Remember, walking by faith and managing with grace can transform your entire world. Until next time, stay blessed, keep shining, and let's keep those books looking beautiful.